Our mission at SD Bullion is clear. The lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is our good friend, but it's been a while since he's been back with us on the show, Harvey Organ. Harvey, it's great to have you back.
Oh, it's great to be with you guys today.
Well, why don't we start by breaking down the trading action in this thinly traded holiday week. The big smash down, of course, coming on Wednesday, where silver was taken down about 60 cents and gold was taken down, about $20, $30 really from the highs of the London session. So what's your take on the smash down, Harvey?
Oh, this is easy. I record generally once we enter into the options expiry month, which is generally the last week, starts the 20th, 21st, and it ends on the first day of the month of the next month. And what these guys do, first of all, you have the COMEX expiry. COMEX will be expiring this Monday. It's usually 4 days before first day notice. But it doesn't end there, because not only do you have the COMEX expiry, 3 days later, which is the 31st, you have two other expiries. One is the LBMA. They have these contracts, forwards and an option to purchase. That ends, I believe, at 12 noon their time. And then finally, the banks have to dealing with their own people. So, and that ends on the 31st of the month. So we have three sets of options, and it is obvious this has been going on now since I've been watching the last 8-9 years. Every time you go into an expiry month, these crooks whack the metals. Now, this month, we saw one other thing: the high amount of options expiry, not only the high amount of the open interest on the COMEX was so high that the banks had to raid. So they raided on the gold. They raided silver was 177,000 contracts, something like 130% of the annual global supply. And the COMEX gold was 510,000 contracts, which is the last time we saw that was in 2012 when the price of gold was 1,700. So it was obvious to me that a raid had to come. Interesting, I sent emails to the CFTC warning them that the raid was coming, and it certainly did. And then I wrote back to them. They said the boys didn't disappoint me. So this has been going on constantly. And your readers should, be not to worry, because once the first of the month comes, then gold and silver will start moving back again. So anyway, that was the reason for the trading. Okay, and those people that buy options on the COMEX, you're dealing with crooked people, the banks, and they will fleece you as best they can all the time. So it's nothing but a fraudulent casino, where the house has all the rules and they will steal from you.
Yeah, this setup has happened over and over again. And this week in particular was interesting because silver, once again, I think this is the fourth time it poked over $16 on a spot basis. And, that's a verboten move. The cartel came in and beat the living heck out of silver and pushed it down. Silver was, in fact, targeted first on that big Wednesday downdraft. And, gold also got over 1260 at one point this week earlier.
Yes, sir.
And that's not something that they want to have being sent in terms of technical signals with, so much interest remaining. They've been trying to beat this move down, and I was looking at it last night thinking, well, if I was the cartel, where would I try to get these prices? And in their wildest dreams, I'd imagine that they'd love to roll back the entire move going back all the way to February 1st, both in silver and gold. And that's just not going to happen, because that would create such an enormous amount of physical demand that it just would not be possible. When we were talking about, gold at roughly $1,110, and silver going all the way back to February, which would have been February 1st, would put it back to like 1420, give or take. Yeah. And I don't think those prices are going to come. But when it comes to pulling the move back to, like, say, that February 11th inflection move, that big burst that we had, gold put in a move that was bigger than 5% up day on a single day. I mean, maybe that's where they're going to be able to get prices down just below that. So 1180 on gold, who knows? We'll see. But with this holiday weekend and getting on the other side of the options trading, that's going to be pretty interesting next week. I think we'll probably firm up faster than what most people are expecting, because the underlying thing that's going on here is these markets are trading differently this year, because there's a shift in the amount of demand going on. People, institutional buyers, the Druckenmillers of the world, et cetera. Even though China has pulled back a little bit, there's still ongoing demand.
The demand is huge.
Yeah.
So you got China, you got Russia, you got countries buying gold. So basically, all the gold is moving from west to east. And they are China is buying somewhere around 51 tons of gold per week, or roughly 200 tons a month. And you can see this in Switzerland where the refiners are going 24 hours a day, 7 days a week. And what they're doing is they're minting kilobars. And kilobars are their 32.1 ounce bars, and they go straight into China. And because that's the mechanism, that's what they store their gold in, is where over at the COMEX were 100 ounce bars, over there they're kilobars. And so that's why you're seeing huge demand for the metals. And eventually what's going to happen is the gold that is the last ounce that comes out of the West, and China can't get it, that's when the game ends. And they will do their thing, and they will probably say that they're going to have a gold standard and revalue gold. The silver will become the metal for the average person, and you'll see it at probably multiples of what it's trading now. And this will be shortly. This will be, because this can't continue. What's going on now is just absolutely insane. Markets all over. Yeah, go ahead.
When you think of that end game scenario, how do you think that the sequences or the stages that would likely unfold? Maybe even a timeline too. I mean, you're hinting at your view that it can't go on much longer. Do you think that talking about something in the next year, 2 years? What do you think?
Year. I think this year.
Yeah.
You're seeing the Keynesian economics. Being destroyed. All the world. You're seeing Japan in a total mess. China is, paper-wise, are a mess. They're accumulating gold, of course, but they've got 31 trillion equivalent U.S. dollars in debt, of which probably 20% is non-performing. I mean, you got $6 trillion of worthless paper there. They're imploding. Japan is imploding. Japan's got a total debt to GDP of 300%. I mean, their economy can't go. And now, for the first time, you're seeing Kuroda starting to suggest they're going to the paper route, the helicopter route. They want to give free money to poor citizens. When you start seeing that, the world is going to say, wait a minute, we're none of that garbage. And they start seeking physical metals and no paper. They're going, and they want the stuff they can see and put in their hands. As opposed,
we're even seeing periphery economies literally, inject some money out of helicopters already. They're doing it in Canada on a small scale basis.
That's
and
true.
In New Zealand.
That's true. It's starting. First of all, this NIRP, or negative interest rate policy, is very bad for the banks and very good for gold. Okay, because this is a new experiment, and it just doesn't work. It's supposedly an extension of Keynesian, but it totally is destroying. And you can just see it in the Japanese market, in the Nikkei. They just cannot take it. And you're seeing problems already in Sweden and Denmark with their house prices going sky high. negative interest rates will not work. Okay, and so I doubt very much even if the United States can try this. It's just not going to happen. Okay, but anyway, but we have to be alerted to it because these bankers will do anything to keep the paper game alive.
And then over on the currency war front, I know we were talking before the show started, you had observations about what's going on with the yuan versus the dollar, and China sending signals, and I think you're on target with that. Why don't you share with our audience what you think is going on there as far as China sending signals to Uncle Sam?
Oh, for sure. What you've been seeing the last 4 days, the yuan to the dollar was, the yuan was rising. And on the 18th, it was at 6.45. All of a sudden, you're hearing the United States right out. Okay, first of all, you had the FOMC meeting, and Yellen surprised everybody by saying she was not going to raise. She was tame, and she said her dots were 2 instead of 4. Leisman asked Yellen, "Have you lost credibility? Has the Fed lost credibility?" And her answer was garbled so badly that all the professors in English tried to understand what she said. It just made no sense whatsoever, and it didn't. You just read it; it was unbelievable. Then
the rumors about her senility have been going around lately too.
Oh yeah. Okay, but interesting. And by the way, Bullard, the one of the Fed voters, did not go negative. He went along with Yellen. 2 days later, all of a sudden, you see Bullard going, saying, "Well, wait a minute, we're still on target. We have to, our dots. We still have to raise rates." That's when China said enough. So China immediately sent signals. By what they did is they went and lowered their yuan fix. Okay, so it went from 6.45 now up to this morning at 6.52. That's a devaluation. And what it's really hinting on, this is small what you're thinking, but what China is saying to the United States, you raise rates and I'm going to devalue to 8 yuan to the dollar. That would send so much deflation across the world. It would slow down economic activity to a snail's pace. The whole world would just stop. The emerging markets will go bankrupt. Commodities will fall like a stone. The whole world would just stop. So the United States knows this. The United States needs to somehow kind of get to normalize rates, which is they should have done that 2 years ago, but they can't. They can't raise rates because they got such a huge derivative problem. Raising rates will probably, knock out the 5 major banks plus Deutsche Bank. So that's why they got a dilemma. And besides, when they raised rates in December, they didn't take the punch bowl away. The rate that went up was they didn't take away any liquidity. So it was done by decree. Normally, when you raise your rate, you're going to take the punch. You remove liquidity. These guys didn't do it.
Yeah, so, in fact, when they raised with the 25 basis point hike to Fed funds rate, they weren't able to actually get the market to respond in full, and it only, in terms of the translation through the marketplace, only went up 13 basis points, which absolutely proves that there's not enough demand in the market to even, check out new loans. That's how broken the economic system is.
100% correct. And the reason for the 13 points is because they didn't withdraw liquidity. So there was no interest to drive rates higher.
It was fake. It was all move for show.
That's all it was. So they all know this. China knows this. China says, if you want to play the paper game, we'll keep playing the paper game. Why? They'll just keep taking the physical metals and all the oil and everything onto their shores. And when this thing ends, they'll have all the commodities and everybody else will just say, okay, we default. Raise the value of gold, raise the value of silver, and let's start all over again. That's how China is viewing how this thing is going to end. But right now, that China has sent a strong signal to the United States, you are not to raise rates. Because if you do, we will lower our yuan value to 8-1. That's what it's heading for. Right now, China's playing the game by lowering their yuan value in very small, little, tiny amounts, hoping the United States gets the signal and starts playing along with what they're doing. So these last 4 days have been very interesting, especially today, this morning. It's trading, by the way. China was trading last night, and again, the yuan was devalued again, a few points. It went from 651.8 to 652.388. Okay, so they're slowly, every day, the last 4 days have been lowering their yuan value. So I'm telling you that is something that I write about, and I'm alerting everybody that we have to certainly pay attention to that.
So at some point, we've got all this talk about cashless societies. They're buying safes in Japan to the level at which there's no more safes available for people to buy because they want to take their own monies out of the banking system. The craziness in which things are going on in really big economies, including Japan, is just getting to the stage where there's so much stress in the system. You just gotta wonder what the heck is going to happen later this year. When you look at the rising rhetoric of cashless societies, Larry Summers putting in a Wall Street Journal editorial, the talking heads from officialdom left and right talking cashless society. What's your take on all of this buzz as far as the propaganda seeding the merits of the cashless society and how this all relates to this, the stress in the financial system?
Okay, I'll answer that very simple. Goes back to NERP. The reason, one of the things that when the banks go into NERP, one of the problems is you and I will realize, oh, wait a minute, why am I paying to store my money at the bank when they're using it? So I take money out. So if too many people take out, then you have the multiplier effect going in reverse. So it'll destroy the banks. So that's why you're seeing Deutsche Bank kind of told the ECB Draghi, please don't, you're killing us.
Right.
Deutsche Bank's earnings were just horrifying, and Credit Suisse, they're all. So as soon as they're going into NERP, because their spreads go down, and of course the ECB and of course the Fed, they do everything for the banks to try to keep them. So all of a sudden they're hurting them. So now, so they're all caught between a rock and a hard place. They know they can't go below zero. Because NERP is hurting them. Yet they need to do QE. But what's the problem in Europe? The problem in Europe, there's not enough bonds to buy. They're already reaching maximum amount they can buy. And now you're seeing the 10-year Japanese, the 10-year German note is 7.17 this morning. So in other words, you put your money in for 10 years and you get 0.17%. That's good. If I was a German citizen, I'd scratch my head on that one, And you know what it is in Japan? 10-year money? -0.8. You put your money in for 10 years and you pay them 0.08%. Brilliant. Keynesian is destroying the entire global system. And I can tell you this can't last. It's just a powder keg. And you're seeing all economies. You're seeing now the earnings of all the S&P are coming down, and yet so they realize that the stock market is being manipulated higher. As a matter of fact, everything is manipulated. Oil, you name it. We're dealing with governments controlling just about every market there is.
Good thing gold and silver aren't affected by that at all.
Oh, of course not. The funny part about it was, way back with myself and a few others telling them that gold was manipulated in 2002, 2001, and they looked at us as if we're some morons, I mean, I've been doing this for 15 years knowing it's manipulated. See, the difference back then, they tried to hide it in 2002, 2001. Now they're open. They don't care. It's just, you can see it. In other words, a whack, what you're seeing, I mean, it looks awful. I go and write an email at 3 in the afternoon telling him that there's going to be a raid at night and the next morning to the CFTC, and it'll be a big one. And sure enough, it was. It's got to be egg on their face. I'm doing it, and I can assure you a lot of others are doing it as well.
So have they been responding lately?
No.
The Securities Exchange Commission and the Commodities Futures Trading Commission, when you email them, are they, ignoring you?
Some of the CFTC sometimes responds to me, but not the SEC. The SEC is zero. I guess the SEC is really worried because they know that the SLV and the GLD are frauds, and they know it, and they've done nothing about it. And how this ends is going to be interesting. When all of a sudden, because I as far as gold is concerned, I know how they're getting it. It's getting it through swaps. So gold is going into the GLD through swaps from central banks. So it's really central banks gold, and the gold has to go back. So in other words, it doesn't belong to GLD. It belongs to a central bank. Exactly like Germany. Interesting, by the way, I don't know if you guys have caught this, but for the last month, Germany got zero gold back from the Federal Reserve Bank of New York. First time that's ever happened. So usually they've been getting 10 tons back, and all of a sudden, I get a reading on the Monday. Monday, I'll get the Federal Reserve Bank, what they do, and I'll be fascinating to see if we have another month of zero gold coming from the Federal Reserve Bank of New York to Germany, which means Germans can't get their gold back, and that kind of means that the gold at the Fed is kind of disappeared. And this is foreign gold, so this is German gold, Austrian gold, foreign gold that's kept at New York is certainly compromised somewhere. Okay, so anyway, that's what I'll be watching that one for you guys.
I'm sure we can blame the winter weather on that. JFK had about 2 feet of snow back in January.
Yeah. Yes. This is. This is February. Did we have a lot of snow in February?
Well, we had that one occurrence of 2 feet, so they're probably still working on it.
So probably the gold is stuck in there. They couldn't get it out. Okay, that's fair enough.
Seems reasonable.
And paper gold's really heavy. Come on, guys.
Wanted to give the listeners a quick update on what we're seeing in the physical market. The U.S. Mint continues to crank out Silver Eagles at max capacity. They're at 14 million coins now for the year. That's already a record first quarter. And, well, I'd imagine they're probably shut down today on Good Friday. So next week we'll probably see, if I had to guess, 800,000 coins, as they've been producing about 200,000 coins a day. Bringing the total for the first quarter just shy of 15 million, which puts us 15% higher than last year's first quarter, which obviously 2015 turned out to be an all-time record sales year for the Silver Eagle. So we've already sold 15% higher than last year, which is an all-time record.
Well, your listeners should know that the United States, the demand for silver far exceeds what the U.S. produces. The U.S. produces about 32 million ounces. And I think what you're showing is the demand is coming from about 50 million, which means that Mexico has to supply. Mexico is their big import guys, and eventually that's going to run out. They need that. And remember, you got demand for jewelers, you got demand for television screens, pharmaceuticals, right, for burns, terrific stuff, So really, the demand for silver, I believe, is now over 1.1 billion ounces, which is really huge. And the supply from the mines are about 700 million if you take away China's production and Russia's production, because they keep all theirs. Nothing goes out of either of them. So that's a huge deficit of silver, and the scrap is coming less, because as the price goes down for all these years, the people who had the silver have already given up. They're not going to get up now at these low prices. So really, the scrap is very low. So Steve St. Angelo wrote a beautiful paper on that, and it was on your site. And tell people to really read it. He is very good at understanding the mechanics of demand and supply on silver.
That he is.
Yeah, I've known Steve for a while. He's really good, and he's doing one on gold now, which is, I'm really excited to see that one out. as to where he believes all the gold is moving and things. So it should be exciting. There's something else that came up on Thursday, which is interesting in how this game ends. And you guys should follow Horseman Capital. These guys, this hedge fund has been winning constantly, whether the markets are down, and they are basically shorters, but they do some buyers. And they've been watching the Japanese, and basically the Japanese citizen. And the Japanese citizens are huge savers. And what Horseman Capital has been doing is watching what happens to the yen. And when the yen starts rising in value, it means that citizens are withdrawing their savings. And the savings is what was propelling the world. The Japanese are no longer buying and buying investments around the world. Then what happens is they believe that this will be the signal for the crunch, and they've been studying this for the last 6 months, and they brought it out on Thursday last night. Okay, so you guys want to look that up, and it's I'm following it too because it's really fascinating. If you look at their map and plot, it seems quite accurate. So they're basically saying, watch what happens to Japan. And of course, if their markets are going to crumble and the citizens withdraw their yen, this will collapse the economies around the world. That's what they're saying. So I thought that might be a little thing for you guys to look into. So anyway, it was published on Thursday night.
And on that note, we hope all our listeners have a great extended long weekend.
I wish you all a very happy Easter weekend, a very safe one, and we'll speak again.
All right, Harvey Organ, it's great to have you back, Harvey.
Thanks a lot.
All right, for the Doc, Eric Dubin, and Harvey Organ, thanks for tuning into this week's SD Weekly Metals and Markets.